Welcome back to Squawk. Broader markets keep trending higher, though we've seen a pullback in activity by retail investors. Our next guest says that despite the slowdown, overall participation in the market continues. And among the stocks they're buying, Apple. That stock was the #1 buy for the third month in a row. For more investor trends, I want to bring in J.J. Kinahan, Chief Market Strategist at TD Ameritrade. It's great to see you. Let's just start with the broader issue, which is retail investors in the main, which is to say that there has not been as much activity as there had been. Is this just the Reddit craze, if you will, wasn't there for folks, or what do you attribute it to?
I think it's a few macro factors overall, Andrew. You see the entire market where volumes are coming down. So it's not just retail, it's overall. And I think it's primarily a couple of things. Number one, vaccines. So people want to be outside. We're coming to the time of year where weather's improving. You living in New York, me living in Chicago. You know how when the weather turns into spring, people are just anxious to be outside. 20% of the adult population in Chicago is now vaccinated. I think people just want to be out. You guys have been reporting over the last couple of weeks also in terms of travel and the airlines bringing back flight attendants, pilots, etc. So with that, and you look at the TSA numbers that you've also been reporting on, you're seeing that they're near pre-pandemic levels. I think what it really is people have been cooped up for 14 months, weather getting better. People either want to go outside at home, they want to travel, and then there's one other major factor, and that is there isn't really the sexy story, if you will, at the moment. You reported on what our clients bought over the last month. What's interesting to me is one of the stocks they sold, GameStop. As soon as GameStop hit $200, our clients, last month, our clients became very heavy sellers of the stock overall. So when you look around and you say, what's that stock that's really attracting retail? Apple, as you said, for the third month in a row, but that's our #1 held stock as it is. So it's a stock that normally will attract people, and it sold, as it sold off last month, attracted more people, I think, than normal. So the buy the dip mentality isn't that either.
So, but JJ, I think one of the larger questions about the COVID trade, if you will, or the stay-at-home trading frenzy that took place was whether it was a phenomenon that would be sustainable, right? This was probably something I imagine your corner office was thinking a lot about. I know the folks at Robinhood who've been growing their users and customer base. What does that look like to you now?
Well, I don't know that we would continue at those same levels. Let's face it, Andrew, those were levels, you look at the fact that we were doing up to 50 million options contracts traded every day at the OCC, and now that number's come down significantly. So I think what you will see is certainly much higher levels than we saw in 2019. I don't know that we're going to be able to sustain those amazing levels that we saw in January and February of this year. But we are, if you look where we were last year in overall volumes, et cetera, on the market, we're holding where we were last year when we picked up a ton of new clients. Let's not forget where we were 2020 compared to 2019. So I do think people, they may not interact as frequently with the market as they did, but it's not like those clients are closing accounts and going away. They are still going to be there, and I actually think it's incredible that we were able to add so many new people to the market over the last year and a half after, for 5 years, throwing up our hands and saying, how do we get people interested in the market?
So the question I'd ask, given the kind of audience and customer that you have, is about the great rotation. What you think that really looks like. So many folks I think are still holding on to big tech in many ways in retail land, and whether you think that they end up participating in that great rotation, or whether you think that there's going to be an opportunity and you're going to see people, quote unquote, buying, if you believe this is a dip, on some of those technology names that were high flyers for so long.
Well, I think it's going to take a little bit greater dip than this, to be honest, Andrew, to see people really come back in a bigger way to technology. Let's face it, when you see the S&P and the Dow just at all-time highs here, setting it a few days in a row, and I think that's also a factor in maybe a little bit of hesitancy, is the fact that I believe it's 5 of the last 6 days now. The S&P 500 has set a record. So if we set one today, I believe it'll be number 20 on the year already, which is pretty incredible. It makes people nervous. They don't want to feel like they're the ones who are buying the top. So I'm not completely surprised by that. I actually think a bit of a sell-off, you will see people come back and participate even more. You know, to just throw something out in terms of the buy the dip. Last month, Walmart hit its 6-month low. Walmart is very rarely a stock we see as an unusual buy. Walmart was an unusual buy. Certainly not a sexy story by any stretch of the imagination. So I think what people are actually looking for, even more than necessarily tech, is underperformance.
Shepard Smith here. Thanks for watching CNBC on YouTube.